With the weekly charts losing strength, could we potentially see a crash below the expected 25.2 to 24.4k support if it is reached? If so, what will this mean for the macro charts of Bitcoin, and could we potentially even see new lows as a result? These are questions we're going to go ahead and answer today. Let's get into the video. Okay guys, welcome back to the channel. Thank you so much for tuning into today's video. I hope you're all having a fantastic day today. We're here to look at Bitcoin from a short-term and macro perspective. We're going to be discussing the daily, weekly, and monthly trend. From a technical and structural perspective, we're discussing the short-term time frame price action, what we expect to happen, and what is happening on the charts. We'll also be talking about the possibility of a retest of 25.2 to 24.4k, what we need to see for that to occur, and more importantly, what will happen to the macro chart and macro direction if 25.2 to 24.4k is lost? Could we potentially see new lows, or could that extend us into a long time frame or a high time frame chop zone that drags out Bitcoin, delaying the bull market? These are questions we're going to be answering today. We'll go ahead and get stuck into it. Before we do, smash the like button, hit the comment button, and subscribe to the channel, guys. We do daily videos on Bitcoin, focusing on the facts, the data, the technicals, the charts, the news events, and so much more. No emotion, no hype, no BS. If that is the kind of content you're interested in, joining our Telegram channel is going to be the right move for you. The second link down below, you'll get access to charts, updates, analysis, educational posts, news events, videos, information, and so much more. If you're interested in joining our VIP channel, you can do so to get access to our trading signals, exact entries, exact targets, exact stop losses. All the information can be found in the pinned comment. You can find our entire trading tracker right over here to show you the channel. This is a channel over here, 568 members. You can see exact entries, exact targets, exact stop losses for our trades with justification. And of course, you'll get access to 4 exclusive group chats for VIP members only. Let's go ahead and get into the video, starting off with the market data. Currently for the month, Bitcoin is down 8.87%, guys. We did see a fair bit of volatility at the start of the month. In the last 10 or so days, we have been consolidating, but we are consolidating in a very significant level. If you haven't watched yesterday's video, I highly recommend going back to watch yesterday's video, because we discussed the consolidation as a primary, that was our primary discussion in yesterday's video, was the consolidation, what it meant, and what we expected from it. If we go ahead and zoom up over here, we can see the 24-hour volume is up 36%, sitting at 42 billion. Again, nothing too unexpected there. We are entering the week. Out of the weekend, we do expect volume to start rising. 24-hour liquidations, we are currently up 116%, sitting at 55 million. As for our volatility index, not too much change over here in the last 24 hours, guys. We can see that the overall volatility index for the 30-day period is sitting at 1.36, and for the 60-day period, we can see the overall volatility index is sitting at 1.98. So our volatility index is actually pushing to quite low levels. We don't generally see the volatility index on either the 30 or 60 underneath 2%, and when we do, it generally isn't a very good sign for the strength of the higher time frame trend. Looking at liquidations, we can see with over our 55 million, a massive amount of those liquidations were from long positions, of course, with only 7 million in short liquidations. So over the last 24 hours, longs did definitely cop the short end of the stick. Moving on, the DXY has opened. We can see, we talked about the DXY yesterday, so we do still have a few annotations on the chart. As you can see, the DXY has broken out from this higher time frame downtrending resistance. This is, of course, our downtrend. So we are technically out of a downtrend now on the DXY. The DXY is heading upwards. As you would know, the DXY is a representation of this relative strength of the US dollar in comparison to other currencies. So knowing that if the US dollar or the DXY does rise in price, it's a general indication that we're going to see asset prices fall in relation to the US dollar and thus fall in value. Now, there is about a 70% inverse correlation, or 0.7% inverse correlation between the strength or the price action on the DXY and the stock market. So if we do see the DXY rally, we generally see the stock market fall. And we know that cryptocurrency and stocks are more or less correlated, so they do generally move in the same direction. Now, the intraday movement is less important than the higher time frame. If you go to a smaller time frame, the correlation is spread more thin, meaning it's less correlated. If you go to a higher time frame, the correlation becomes a little bit more secure, and more strong. So when we're zooming out and we're looking at the higher time frame direction, we're looking for weekly directions, we're looking for daily directions. We're not looking at the moment-to-moment direction for the DXY and cryptocurrency, or the DXY and the stock market. So looking at that and knowing that now, if the DXY does continue upwards to our next target, which is going to be 105, we can expect stock market and cryptocurrency to continue downwards. DXY fails to hold above this uptrending support level here, we can actually expect a retest of this horizontal support, and it is likely to be lost if it does retest one more time. If we do lose that, we can expect a move, a strong move down to test this liquidity zone right over here, sitting between 99 and 98. Of course, this will be very, very bullish for cryptocurrency, very bullish for stocks, and of course, this will be very, very bearish for cryptocurrency, very bearish for stocks. Keep an eye on that, guys. Moving on to the stock market, we can see the S&P 500 fail to close a daily candle above our major resistance. Looking at the weekly chart, guys, we're currently retesting that range, yet to close a candle. We don't have too much longer on that close. Let's take a look if we can see the weekly close over here. We have about 4 days and 19 hours remaining for that weekly candle over here. It is able to close above 4,200. We are likely breaking through this resistance, which will result in a continuation upward, guys. If we do not close that weekly candle above that resistance of 4,200, this level is still going to act as a resistance, and we can come all the way back down to retest this uptrending support. As you would know, this is a rising channel formation. A rising channel formation is a bearish structure. It represents an uptrend, but it is representing a weakening uptrend, meaning momentum, volume, volatility, all those things which we can see are actually falling as the price is rising, and that represents the strength of a trend is being lost. And if that gets exacerbated on a higher time frame, we can see a higher time frame correction if we do lose this uptrending support. So watch this uptrending support. If it ever gets retested and we drop below it, that is going to be a massive sell signal and a massive warning sign for a continuation downwards. Until then, we are in an uptrend, so don't be surprised if we start to push higher, and you know our trigger is a weekly over 4,200. Looking at the Dow Jones, a very similar structure over here, very, very similar saying over here. Again, uptrending support line, lose that, we're going down. Horizontal resistance here on the higher time frame, break above that on the weekly, we're continuing upwards. Let's go ahead, guys, and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, BitGet. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than BitGet. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our Mega Whale promotion campaigns that we run every few months. Alongside that, guys, BitGet is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. BitGet also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, BitGet offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to BitGet. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And there's a lot to talk about. I want to talk about the smaller time frame. Talk about the next move for Bitcoin. I want to discuss the higher time frame trends. I want to discuss the daily chart as we are retesting the lower band of the Gaussian channel right now, which is again a very, very strong support, but of course a very strong bearish trigger if it is lost. I also want to talk about the 2-day chart. I want to talk about the macro charts from a technical perspective and from a structural perspective. I want to discuss the 4-year cycle briefly, and more importantly, I want to talk about what will happen to the macro trend of Bitcoin if this 200 plus day long support, right, 280 to 300 day long support, which is the 24.4 to 25.2k support level, is lost. What will happen to the trend on the macro chart? What will happen on the trend to the weekly chart? What will happen to the trend on a daily chart? What will that do to the price action? How can that impact the macro direction? And could that push the price to new lows? This is very, very important we discuss, because 25.2 to 24.4 is a massive, massive area of support and an incredibly, incredibly important level that Bitcoin needs to remain above from a structural perspective to keep the weekly uptrend intact, guys. So, before we talk about that, let's discuss these zones. So what we're looking at here are our red zones and our green zones. If you can see our red zones, these are going to be major resistances. Our green zones are major supports. On the right hand side, we have our annotations to make it a little bit more clear. If we are in an uptrend, pushing upwards from the breakout at 25.2 upwards, we are in an uptrend on the weekly. So we are technically still in a bullish uptrend as we have broken up from 25.2 and we have yet to lose that level again. So we are in a weekly uptrend. We are not macro bullish until two things occur. A break over 32,000 on the daily or a monthly candle close above 30,000. The monthly candle close being the more important of the two, as that represents the yearly low of the prior cycle. If we take a look at these horizontal lines over here, these are our yearly lows of the prior bull run cycles. Every time we monthly candle close above, that always sends us upward quite aggressively to our dotted trend line, which is our dead cat bounce high after the bull run high. So looking at the dotted trend line is 48,000. So moving back to this chart over here, if we take a look, we are currently in a weak bearish trend. We are in a weak bearish trend as we have broken down from the 30 to 28K resistance. We are below that. We have pushed from the top side down. Therefore, we are in a weak bearish trend. The weak bearish trend is a daily downtrend. This is a daily downtrend as the weekly uptrend is still intact. The daily downtrend is very much in play right now. We can confirm that. We have lost the 50 EMA, which is the red line. We have lost the Gaussian channel midline, the Gaussian channel upper band, and of course, momentum is very much on the down move. So we do have a bearish move toward the downside. We have a downtrend, and we have overall weakness in this higher time frame that could develop into a bearish weekly downtrend. We have a upper band, our lower band here is providing temporary support and is one of the last legs to stand on over here before we see that continuation downwards to 25.2 to 24.4K. So definitely keeping our eyes on that level. So if we do see a break from this lower band over here, we are most likely now going to be testing our weekly resistance or weekly support levels. At that point, a loss of 26.8K, we are now testing our weekly supports. And our weekly supports being, from a technical level, if we zoom out, that being the 200-day moving average, represented by the yellow line, the 50 EMA, represented by the red line, the Gaussian channel midline, represented by the thick red line, and the bull market support band, represented by that orange zone. We have 3 to 4 key points of confluence as support sitting between 26.8K and 24.9K. Of course, as you would know, 24.9K is sitting between the 25.2 to 24.4K level, being this green zone. So between this blue line and this green zone, we have 4 singular points of technical support which will, if invalidated, trigger a weekly downtrend. Thus, if we do push toward this level, the probability that this level holds is actually quite low. We do not expect a high probability of a bounce from this level. In fact, if we lose this level, we would now be flipping bearish on the weekly chart, and that would actually give the strength required to push the price back below it. So this poses a question. If we lose where we are sitting now in the smaller time frame, are we bound to potentially crash below 24.4? And the answer to that is, well, nothing is for certain. Nothing's for certain, but the probability of an extended continuation or higher time frame crash, if we do start to lose this small time frame support level, which we'll discuss again, which is sitting between 26 to 25.8, the probability that we retest 24.4 to 25.2 is already high, but the probability we lose that level is actually significantly higher, considering the fact that the bearish or the weekly trend will have flipped bearish. If we drop below 24.4, we are in a weekly bearish trend. The weekly bearish trend begins when 24.4K is lost, with a macro bearish trend begins if $20,000 to $18,000 is lost. Now, here is the thing. There's a very big difference between being weekly bearish and being macro bearish, as there's a big difference between being weekly bullish and being macro bullish. You've seen how different these two things are. You've seen the validations that require us to flip from weekly bullish to macro bullish. And we'll discuss what we'll need to see for us to flip from weekly bearish to macro bearish. Now, just because we lose 24.4k, it does not mean we're going to new lows, although what it does mean is it will shift the probabilities towards from new lows are incredibly unlikely to new lows are more possible. And that is a bad sign, since the market moves on perceived systematic risk. If something becomes more probable, the market can try price it in, or is it more expected, and we could potentially actually see it play out. So what would it take for Bitcoin to actually go to new lows? Knowing what we know now is the daily trend is lost. The weekly uptrend is currently on the verge of being lost. It is being tested. The main support levels are being tested. If those levels are lost, we are going into a weekly downtrend. If we are in a weekly downtrend, the probability of our support level being held is far lower than if we weren't in a weekly downtrend. So the probability of this level being held is far lower if we do retest it. If this level is lost when we retest it, we are in a weekly bearish trend. If we are in a weekly bearish trend, the probability for a continuation lower starts to increase. So now, what would it take for us to flip this downtrend, if it occurs, into a macro downtrend? Two things. Number one, we will need to break a monthly candle close below the prior low. Going into a 4-year cycle, we will need to break a monthly candle below the prior low at 16,200. What will put us at risk of doing so? A loss of $18,000. If we lose 18,000, which is a support, that puts us at risk of retesting these lows at 16,000. Now, there's another thing that will have to happen. From an economic standpoint, we're going to need to see the economic environment shift. Currently, we are seeing CPI, okay, inflation, well, they are inflation. CPI is a representative of inflation, and of course, inflation determines interest rates. For the last few months, since November, we have seen most of these come down. We've seen CPI come down, and as a result, we've seen the aggressiveness of rate hikes start to slow down too. We're coming closer to a pause. However, in the last month, we saw CPI rise. We saw month-on-month CPI go up 0.4%. We saw PPI go up plus 0.2%. We saw NFP come out at plus 180,000 jobs more than expected, which could be considered excessive growth, or you could consider exponential growth faster than anticipated, which again is a signal of rising inflation. And this was not unexpected, right? If we look at the government's been doing, they printed $360 billion, guys, in the last 2 months. Why? To save the banks, guys. They didn't save the banks. So once again, they're throwing the retail investors, they're throwing the public under the bus, they're pushing inflation up again as a result of saving the banks, and they're telling us everything is fine. They're saying inflation's coming down. Yeah, year-on-year inflation's coming down, but year-on-year inflation doesn't mean anything, guys. Month-on-month inflation is important. This is showing that in the last 4 weeks, your actions have consequences. Your actions of money printing has resulted in CPI rising. And if we know that CPI is a leading influence on interest rates, if CPI continues to rise, interest rates are not going to pause. They're not going to pivot. They're going to continue upwards. And that is the threat. If that occurs, we will see Bitcoin go to new lows. If that flip happens, if we see the narrative shift from a pause is coming, because watch the narrative. It went from a pivot will happen in the next 3 months to we may pause interest rates. 2, we don't know when we're going to pause interest rates. And then it could flip to we actually have to bring interest rates up again as inflation is rising. And that is the key trigger. If that narrative there flips, that is going to push the markets back down, guys. As you have to remember, this entire move upwards was done on the basis of perceived systematic risk decreasing as a consequence of interest rates expecting to pivot in the future. Around June, July was expected. So if that doesn't come to fruition and that changes, we can expect this move to come down. And that's what we're already seeing. We're already seeing the narrative shift. We're already seeing the price move down. Price doesn't move randomly. economic drivers, we have macro drivers of price action. When we look at the macro direction, macro uptrends, macro downtrends, it doesn't happen randomly. There are behind the scene drivers that push these prices in these directions. If you understand how to tune into them, like we have done on this channel, you understand how to use them to your advantage. We bought 16.5K because we saw inflation was top. We know that if inflation tops, interest rates in the future are going to start to come down or reduce in their aggressiveness, which is going to lead to an increase, which will lead to decreased perceived systematic risk in the market, and thus the risk asset market is going to rise. We sold at 30,000 as we saw inflation was beginning to rise again, and thus we are selling at a major resistance 30,000 and has come back down. You can use this information to benefit your macro decisions, guys. You can use it to put yourself ahead of the curve. So if we want to see new lows, that is what we need to see. If we do see that occur, where could Bitcoin go? Well, if we do see it occur, and for now, guys, it is a big if. No one is even saying we're going to lose 24.4K to 25.2K. You know what? We may not even go there. But if we do go there, the probability of a breakdown from there is higher. And if we want to see new lows, we need to see the economic situation change. If we do see new lows, I would expect 13,900 to 12,000 represented by these local top points. And of course, this long 300-day resistance before we finally break upwards. That is what I'd be expecting if new lows come in. Short-term price action is going to determine whether or not we break down on the weekly chart. So remember, the weekly support levels that we're looking for, the weekly trigger points on that chart are quite literally sitting, if we zoom in again, between where we are now, which is this Gaussian channel upper band or lower band, and 24.4K. We have 4 points of confluence, 50 MA, Gaussian channel midline, bull market support band, and 200 moving average. These key support levels are sitting between where we are now and the 24.4K level, being the bearish trigger on the weekly, okay? So we do have major support here. As we know, major support is support until it's not, and thus a bounce is definitely possible until it is not. And if we do want to see a bounce, we need to push the price on the RSI through this downtrending resistance here on the RSI, which will flip the momentum positive, and this will facilitate a move past 30K. If you see that happen, a cross of that line, that is going to be the trigger for a push past 30,000, and a macro uptrend will begin for Bitcoin, okay? And I think I would say, based on historical data, based on data we are going to see that at some point, and it is still, as of right now, significantly more likely we see that $30,000 monthly close before we see new lows. I don't think we're going to see new lows again. According to the data, the probability is very small. It is possible, but it's very small. We do have to see what I already said occur to see that happen. As of right now, according to the data we have right now, it is unlikely, and it is still far more likely we continue up on the macro chart. Although we have to understand as traders that can change. We have to adapt, and we have to shift our positions and adapt our positions based on the data and the news as it actually comes out. So if you want to see the bulls reclaim control on the higher time frame, this is an absolute necessity. We need to flip momentum positive. Momentum goes positive, volume, liquidity, volatility, speed, velocity, all of these metrics of price action go positive, and that results in strong price action or positive price trend. That will result that will push the price upwards. Smaller time frame. This range here is incredibly crucial because, as you would know, I just listed 4 major weekly supports sitting right below where we are. They're spaced out like that, all right? They're right below where we are. If we lose this range low over here, we can expect a continuation toward this higher time frame support, 26 to 25.8K. Zooming out really quickly. 26 to 25.8K is the trigger for a strong bearish move downwards. You can see there is a huge gap in the VRP right over here, which takes us down to 25.2. Therefore, guys, a loss of 26 to 25.8 will result in a breakdown to 25.2K, which will push us into that support level. So here is what needs to happen. If the bulls want to reclaim control, they cannot let the price push below 26K. The price has to remain above $26,000, and the price has to regain strength before we see a break below. If we see a break below, we're going to go to 25.2, we're going to go to 24.4. There's no chance we do not see that happening. It's incredibly likely to see that. The probabilities are like over 90% that we see a move down to that level if we lose 25.8K. So The short-term range is very important at determining the macro direction right now, as if we do break below the range low on this smaller time frame, we will inevitably see a retest of this range. And if we see a retest of this range, well, we've already lost a 200-day moving average. We've already lost the midline of the Gaussian channel. We've already lost a 50 EMA on the weekly chart. So if we see this move occur, we would have lost 3 weekly technical support levels already. And that is why Bitcoin cannot see this breakdown if the bulls want to remain control. If you see a breakdown from here occur, we are going towards this level. If you see a loss of this low support at 26.55, we are going to go retest this range low over here, our last chance to bounce. At the moment, we have POC resistance, we have negative pressure, we have bullish pressure. We are bullish above the POC on a small time frame, we are bearish below the POC on a small time frame, POC being this chunk of resistance at this red line. If the price is able to break above the range high, we can see a push into 28K. And if we break above 28,000, the price is going to start looking a lot healthier again on the daily and the weekly, as we would have broken through this bearish pressure on the 4-hour, on the 12-hour, and into our neutral territory, which if we get into above 28K, we're going to see the momentum on the daily push upwards, which could facilitate an eventual break, and the entire trend is going to look more healthy. That is it for today's video, guys. I can't go into much more. We ran out of time. I hope you enjoyed. I hope you learned something. If you've got any questions, leave them down below, and I'll see you guys in the next one tomorrow. Cheers.